Hello there, this is James, and you're watching Tixee Live. And a very good morning to all of you, and all of you a very happy Friday. In today's program, I want to discuss what seems to be a total decline for the single currency, and ask the question, how low could the euro actually go? But before we get into all of that, don't forget, these little videos are for educational purposes only, and in no way whatsoever should ever be taken as financial advice. I always suggest you do your own research and do your own due diligence, and of course, know the risks at hand before entering any trade. With that out the way, let's get started. Hey, and a good morning. Good morning to you too. So let's get started. The euro has sunk to another 20-year low. 20-year low. In fact, it's fallen below the 0.98 handle, and it's now trading around the lowest level since October 2002. October 2002. And that's before I was in the industry. Basically, that's around the time it was, introduced as a currency. A paper currency. So we are in unknown territory here, to be fair. And there's several reasons which is pressing on the euro and pushing the euro further downwards. One, we had the report come in today that gas flows from the Yama Europe pipeline reportedly has stopped. We all know about Nord Stream 1. That's been switched off for ages, turned off. But this is another pipeline now, which is apparently stopped. And this is the pipeline which connects the gas fields from Russia to Poland and Germany via Belarus. So that's another thing. Energy crisis, again, being underlined. And again, this is putting pressure on the euro. The other thing is we have Italian elections starting on Sunday. And as we know, there was a lot of political turmoil with Italy, with Prime Minister, was it Prime Minister? I think it's Prime Minister. They have a Prime Minister, don't they? With Draghi, who was the leader, obviously resigning several months ago. But now, the elections are about to start for a new government and a new leader. And there is real concerns at the moment because polls are indicating that the front runner is this lady called Giorgia Meloni. Okay, and she is extremely far right. What do I mean by that? She tends to be a very heavy Euro skeptic, and her whole party is very, very Eurozone skeptic. So obviously there is concerns that if she does win, then obviously we're going to have conflict between the new Italian government and obviously the EU. I'm not saying it's another case of a Brexit. I'm not saying anything like that, but there's going to be obviously increased tensions between the new government and the EU. And don't forget, Italy is one of the biggest, throat was a little dry, one of the biggest receivers of the big COVID compensation fund from the EU. And they're very heavily reliant on this money, but there's certain conditions they have to meet to get it. And obviously this new government, who is pretty anti-EU, they're not going to agree to all the conditions. So again, this is potentially very dangerous, the Italian economy. And there's a lot of concerns about this. So again, this is weighing down on the euro. The other thing which came in today, pretty much as expected, we were expecting bad news anyway, but it was worse. We had EU manufacturing PMI was announced at 48.5 versus 48.7 expected. Don't forget, any number under 50 is not good news. And the same goes for services PMI as well. That was announced at 48.9 versus 49 expected. And there's another reason why the euro is under so much pressure at the moment. And that is basically the US dollar remains the king. We have still got very, very strong dollar across the board. Driven, of course, by the Fed decision on Wednesday and what they said and their commitment to obviously bringing down inflation. But as well as that, there's more and more talk about recession, which is making obviously the greenback, the US dollar, the safe haven of choice. And the question really is how low can the euro actually go? So let's actually have a look at the euro at the moment. Okay, so this is the euro at the moment. And as we can see, it's currently trading now at 197.59. 0.9759. I'm saying that again. Okay, because like I say, it was finding a little bit of support. Initially around 197, 0.9770. But then since then, obviously, it's now broken through that. And like I say, there is talk, and it's been talked before. And don't forget, I've been a euro bear for quite a while, that the euro could go as low as 0.95 at some point. And many analysts are actually indicating that could be the range of the number. But at the moment, again, because we're at we're in unknown territory here. We're at unknown territory. We can't really look at price action because, like I say, this is the lowest level since October 2002. So we can't really look at it. Good morning, Michael. I hope you're well. Hope you're good. Thank you for coming. Very good morning to you too. Hope you're good. But like I say, we're in pretty much unknown territory here. Unknown territory. And like I say, yes, you can start pricing in the bad news. We always knew they were going to face an energy crisis of some sort. We always knew there was going to be a cutoff at some point. But the build-up and the speed of now, especially with this new pipeline being shut down, is never good. And like I say, this is not a problem for the next couple of months. This energy crisis is for Europe for the next 5 years at least, until they can solve it. And of course, now we've got Italian concerns as well. And obviously, like I say, recession concerns across the globe, okay, which is making the dollar, like I say, very attractive safe havens. And like I say, in time, I can certainly see 0.95 along with many other analysts. That's potentially where it can go. I am expecting a little bit of dip buying before we get there, though. But at some point, obviously, that could be a strong possibility of going to around 0.95 at some point. But like I say, we're going to get dip buying in the meantime. So, like I say, that's just obviously my opinion, not to be taken as advice in any way whatsoever. But anyway, moving on. We got other news today. Another currency. I don't appear to have any good news at the moment. I'm very bearish at the moment. I've been nothing but a bear for the last couple of videos. Anyway, the UK Chancellor is to reveal a mini budget today to Parliament, a mini budget. And this budget is expected to include tax cuts and energy bill support. Okay, and that sounds nice, doesn't it? Tax cuts, so we have to pay less taxes. Energy bill support, because we all know we're all suffering from a cost of living crisis, and energy prices are skyrocketing like nobody's business. So help with that would be great. So that's good news, right? Well, here's the problem with this: how are they going to afford to pay for it? How are we going to get the money? How the UK? I don't live in the UK anymore. I am a Brit, but I don't live in the UK anymore. But like I say, how are they going to be able to afford these new policies? Okay, how are they going to afford these new policies? So you're doing tax cuts to encourage growth, great. But how are we going to generate? How are they going to generate the money to do it when the cost, and pay for the support on electricity on the energy bills, especially as the cost of borrowing is going up dramatically. So how can they do this? So this is what's really is a concern with the sterling at the moment. I didn't think it could go to 95, but it does seem that the EU has everything up its sleeve to bring it back. Well, 95 is being forecasted by ING. That's analyst as well. As from them, Rabobank, Jane Foley, she's a bear like me on the euro. She's saying around 0.95 at some point as well. And there was another one, I think UBS as well. I've always also sort of saying around those sort of numbers. But yeah, that technically could be, that's what they're thinking with the euro, with that. So, like I say, again, it's, I think the problem we have at the moment, we are in unknown territory with the euro. We really are in unknown territory. Yes, we're going to get dip buying. So it's not going to go straight because trading in the market is doesn't do that. Doesn't work like that. Doesn't go in a straight line, does it? It fluctuates, but in the medium to long term, that's the expectation of many analysts. But like I said, as I was saying, so this is the concern. How are they going to pay for it? I mean, the UK borrowing costs for August was more than double than anticipated. So, like I say, so this is weighing on the sterling as well. It is feeling a lot of pressure because now, again, like I say, we're at levels I haven't seen since I've been in the industry. To be honest, we're trading at levels, levels 37-year lows on the sterling. Let's bring this up. Like I say, currently trading now at 1.1164. 1164. Again, this is also being pressured. Don't forget, by a very strong greenback. Now, don't forget, I've said this before. Jane Foley, who is a very well-respected analyst for Rabobank, she's predicting that the sterling could go down as low as 1.10. 1.10 before we can start seeing a little bit of support buying in on that. Will it ever get the parity to the dollar? No, I don't think it will ever get the parity to the dollar. But 110, like I say, Joe Foley sees it from Rabobank going to 110. So yes, indeed, the euro is under a lot of not the euro. The sterling is also under a lot of pressure. What else? The dust has settled after the Bank of Japan's intervention yesterday. Don't forget, the BOJ surprised the market and everybody and finally intervened with the yen. They actually entered the FX market. Apparently, rumor has it they spent 1% of their reserves to buy the yen to support it. But since then, the dust has settled. So let's have a quick look at the dollar yen as well. As you can see, it's found a little, this is on a daily chart, it's found a little bit of stability now at 142.55. So I have to say, after yesterday's dramatic drop when the BOJ intervened, it's now found a little bit of leg room between it. Expectation now, we'll probably most likely see it in a bit of a range now between, say, the 140 zone to that handle of 145, because obviously that's the level which it got to, and that was too much for the BOJ, and that's when they intervened. So we could see a little bit of range-bound trading. I'm not convinced, like I said, that the overall trend is changed. Not till I see that trend line be used as a resistance and more further downward pressure on it. Because, like I say, at the end of the day, yes, the BOJ intervened, and they probably would do more talk of intervention, and again, in the future. But you can't hide the fact that the monetary policy of the BOJ is vastly different from the monetary policy of the Fed. And that, till those fundamentals change, this is where I see it being. Anyway, on the market, on other stuff happening in the market as well. S&P 500, again, remains under pressure, 3,736 points. NASDAQ is the same. Pretty much everything is in the red, especially as we're getting more and more talk about recession building up. That's a good question. Let's have a look. What's the question? Did the BOJ do enough with the dollar strengthening? No, they haven't done enough to change the course. But they can keep doing it, though. And they can keep talking a little bit more about, oh, we're going to intervene again. We're going to intervene again. But they haven't done enough. Until they change their monetary policy, the direction is not necessarily going to be overall different. But good question. What else is coming up? We do have Canadian retail sales later today, but more important than that, we have the next episode of hashtag Ask James, which is at 12:30 p.m. UTC. The topic this week is Introduction to Moving Averages. Again, don't forget, these are little bite-sized pieces of education. So we're going to do an introduction to moving averages. Thanks to Pip Insight 42 for this request. Don't forget, these videos are based on topics you good people send in. And I then create a little video, totally live, of course, because they're always live, because live means live. And I will then discuss, obviously, that topic of choice. And this week, thanks to Pip Insight 42 for choosing moving averages. So don't forget, hashtag Ask James, 12:30 p.m. UTC. So please come and join me for that. The markets, as they currently stand, all in the red. FTSE down negative 1.12%. DAX currently negative 0.56%. Eurostock 50 currently trading negative 1.19%. So everything pretty much in the red at the moment. So yeah, don't forget, I've had a couple of interactions today. Michael, SMF 790 as always. Thank you very much. But don't forget, you can always ask me questions anytime you wish. Or simply say hello if you like. Or share with me your opinions. I mean, how low do you think the euro could potentially go in the medium to long term? Is 0.95? Is that unlikely? I mean, let me say, the one thing which the euro does have in its favor, one of the things the euro does have in its favor is the ECB has only done one rate hike of 0.75. So they could be a little bit more aggressive with that, which could help it. But the problem they have, of course, is they've got a huge energy crisis, which is slowing down, greatly affecting the EU economy a lot. So again, they may be reluctant to do that, because the last time they were aggressive with doing interest rate hikes, and they're scared of this happening again, is they created the euro credit crisis. So by raising interest rates, that's why the pig nations came about. So they are a little bit concerned about that. So that might limit it. But that could be the one thing that could assist the euro if, like I said, the ECB hasn't really been that active yet with that. How about the sterling? Do you think? Good question, Michael. At the moment, that's a 200-day moving average I have on my chart. 200-day moving average I have on my chart. But in the video this afternoon, or what they say, like I say, 12:30, the hashtag Ask James, I'll be discussing obviously the 100-day, 50-day, and like I say, how you can use moving averages both in short-term trading, long-term trading. How you can potentially use it for resistance supports, and obviously the death cross and golden cross, what that means as well. So I'll be doing how you can basically set it all up and things like that. Good question though, Michael. Thank you for asking me. What are your thoughts on? Okay, what are your thoughts on the UK mini budget? Do you think chance is out of depth under the new PM? Again, like I mentioned earlier on, I can see what they're trying to do. A brand new government trying to come on in and trying to obviously, grow the economy. But like I said, my biggest concern, and this is the concern the market has in general, how are they going to afford to do it? How are they going to afford to do it? How can they afford to do tax cuts? How can they afford to do the energy bill? When we've got slowdown in growth already, borrowing costs skyrocketing, how are they going to do it? So it's a crowd pleaser. It's them to try and make a new mark on a new government. But I don't know how they're going to do it. I don't know. And I think that's the problem the market has, as feeling in general. How is it possible? How is it possible? But nice, good question. Is there any other questions? Anything else? Anybody else like to ask me at all? Okay, not a problem. If you think of a question later, okay, you can put it in the comments section, either on Facebook and YouTube. I will see them and I will reply to them next time I'm live on air. So bear in mind, you have that choice, which of course is later today at 12:30 p.m. UTC to do hashtag Ask James, moving averages, introduction to moving averages. And at the same time, I'll be back on again at 2 p.m. UTC to do the US session. So please feel free to come and join me for that. On this note, I was having a conversation before I sign off, just in case there is any more questions. Before I sign off, I was having a conversation with a colleague earlier today, and he's a bit younger than me. Like most people are younger than me. We were having a conversation, having a chat, and he was saying, Will, how crazy the world is at the moment. And he said, is it always been like this? Or is this just, is it increased? This just bad times are increasing. And I said, no, the world has always been like this. It's always been like this. We've always had crisis after crisis and madness after madness. It's always existed. But the difference is, this time around, we've had so many things all at once. Usually you would get a big crisis and then have a couple of years break and then another crisis and then a couple of years break and then something else. But what we've had, what's happening at the moment, we've had everything together at once. And that's what makes it feel even more strenuous. But there we go. Funny times we live in. Funny times we live in. Anywho, if there is no more questions or no more comments, not a problem. Shout out to Michael, SMF790. Thank you for your interaction and saying hello, and great questions from both of you. So I really appreciate that. And I really appreciate all you guys coming to watch me today. And, I really do. I really appreciate your time you do for that. On that note, don't forget, if you're watching me on Facebook and you quite enjoyed this little video, by all means, give us a follow. If you're watching me on YouTube and you like this little video, subscribe if you like. Hit the notification button so you know next time when I'm going live. If you like this video and you enjoyed it and you put up with me, my over-the-top enthusiasm for the market, then give me one of these. It's nice to know that you like what I do. Anyway, Till next time, don't forget, these little videos are for educational purposes only, and in no way needed to be taken as financial. No way. I'll start that again. God, the air conditioning has just gone off. Anyway, start that again. Don't forget, these little videos are for educational purposes only, and in no way whatsoever should it be taken as financial advice. So I always suggest you do your own research and do your own diligence. And of course, know the risks at hand before entering any trade. Till next time, every single one of you, trade safe.